Hello friends, welcome to the ultimate candlestick trading course. Candlestick, is an indispensable tool for successful trading. Right? So understanding candlestick pattern is crucial most times for making an informed decision and maximizing profits in trading. So in this course, guys, you're going to learn the anatomy of a candlestick. So we're going to dive into the kind of candlestick we have and why it's important we pay attention to that. 5 most important candlestick pattern. Now, these are the 5 most important candlestick, and it is proven over time to be, profitable, consistently, moving in the direction, more especially when you get it right. Also going to learn when to look for this candlestick pattern. We don't just look for candlestick pattern scanning the whole chart. No, there are conditions that need to be met before we take a look on this. Now, don't forget that candlestick, is kind of a tool that enhances our trading performance. And at the last, we're going to do a demo trading, searching for this candlestick at the appropriate location and at the right time that you see how it's being done in a real life market. If this sounds interesting, kindly like this video, guys, share with your friend, and don't forget to subscribe to this channel. It helps our algorithm to grow on this channel. All right, so it's important for us to understand that a chart is a visual representation of all the market participants. All right, so this market participant, most times you can use the candlestick to represent the market participants. Okay, there are also other tools like Hikinashi and Bimba and all stuff like that, but we are focusing on candlestick. So we are using the candlestick to represent the market participants. So when the bulls are taking over, we have the green candle moving up. When the bears are taking over, we have the red candle moving down. All right, so now it's also important for you to understand the formation of this candle. Like here now we have the market, the bulls, they open at this low. All right, when they open, the bears pushes the market downwards, and after which it could not be sustained, the momentum pushes it upward again and even higher before coming to this close. The most important thing here is this, that the market actually closed bullish. The formation of the candle tells us how low or how high the momentum is in that particular instrument. All right, so the bearish opens high and went even higher, but the momentum was strong for the bearish. It pushes it down, and here it even went lower and finally closed here. So the only difference between the bulls and the bears is the opening and the close of the candle. For the bulls, they open low and close high. For the bears, they open high and close low. So this can also tell you the 2 only means of making money in the market. It's only when you buy low and sell high, or sell high and buy low. Okay, so I think this is where they coin it from. So the 2 ways you can make money from the market is buy low, sell high, and sell high, buy low. All right, so the first pattern we're going to look at here is the hammer and the inverted hammer, because they are just opposite, just opposed. Hammer and the inverted hammer. All right, so for a hammer candle, if it has this small body and no wick at the top and strong wick downwards, right? So you can see the opening and you can see the close, right? And the same thing applies to the bearish hammer. You can see the same thing here. It could open up and close down. Now we have the inverted one, right? The inverted one has the same long wick, strong body in a closed form. Now this is a type of pattern that signify reversal, right? So this is one type of the pattern that signify reversal. So once we start seeing this candlestick form in a market, which you will see after which I've studied it, then it tells us a story that we need to be very careful and also watch the next action. Now the second one is the engulfing pattern. So the engulfing pattern is a candlestick that engulf the previous candle. Now this is the previous candle is bearish, and after which you have the bullish candle, which totally engulf the first candle. So this green engulf the red, so that's what we call the bullish engulfing. Also, we have the bearish engulfing, whereby the red engulf the green. So this also is an indication that tells us that the bulls are taking over in this place, and also the bears are taking over in this place. So at this point, if it's found at the right location, then take action. Also, we have a morning star. So a morning star consists of 3 candles minimum. All right. So the first candle will be the bearish candle, a small bullish candle, and a big bullish candle, where the last bullish candle engulf the bearish candle. So once you see this pattern in any market, that tells you it's a morning star, and it's an indication that the market will start reversing at this point. Likewise, we have the evening star, where we have the first bullish candle and the small bearish candle and the last bearish candle. All right, and most times this bearish candle will engulf the bullish candle. All right, and at this point the market will keep reversing. All right, so the next one is the tweezer bottom. It tells us a story whereby after a bearish candle, the bullish candle will start at the same location, and most times we engulf the previous candle. All right, so it's similar to like the engulfing candle, but just like this one starts at the same point and also engulf or the same height. All right, so this tells us that the bears we are dominating just a minute before, and now the next minute the bulls are dominating, and the bears are dominating an hours before, and this hour the bulls are dominating. All right, so this also tells us a switch in momentum, and also it can signify a turning point of the market. Likewise, in this tweezer top, whereby the bulls are dominating, and in the next hour the bears will start dominating the same height. Now we have the last but not the least, the doji candle. The doji candle, have different forms and different shape. The first one is common doji, have a small body in the middle and a strong wick up and down. Now the same thing, small body, this is long-legged doji and a longer wick up and down. Now we have a dragonfly. Now this can also be seen as a pin bar. Okay, and they have a long wick, just like a cross sign, and we have this for price and gravestone. Now these are dojis, and dojis can tell us stories where the market is about to turn. All right, so when to look for candlestick pattern? The first one is at a complete 3-wave structure. We believe so much in wave, and we understand that market moves in wave. Now once we have an impulse, a correction, an impulse, which every correction most times is 3-wave: impulse, correction, impulse. So at this point we start looking for a candlestick that we recognize. So once you see a candlestick at this point, after you have seen this 3-wave structure, then it's an indication that this market will start turning up. All right, and also once we see a pattern at this point, it's also an indication that the market will start coming down, because we have seen an impulse, a correction, an impulse, a correction, an impulse. So there are typically 2 ways we look for candle. The first is at the complete of 3-wave, and also at the complete of 5-wave. All right, so we have 1, 2, 3, 4, 5, and also have 1, 2, 3. So wherever you see a 3-wave move in any market, at the base of it, just look for a candlestick you recognize. Now the second one is support and resistance. So at the support and resistance, which you already know, market makes an resistance, it comes low, it makes a resistance. So at this point in time, this is a resistance and this is a support. So you are now waiting for a pattern that you recognize. At this point, you can take the next move downwards, and at this base, which is the support, if you see a pattern you recognize, you can also take a trade upward. And the last but not the least is the third trend line touch. So at the third trend line touch, we believe that market makes an impulse, it makes a correction, it makes another impulse, and it makes another correction. All right, so most times, once a market makes an impulse, correction, impulse, you are permitted to draw this trend. Okay, you are permitted to draw this trend. So at the third time the trend is touching this point, Now, because the reason why this is so powerful is because the market has established a trend, impulse, correction, impulse, right? So at the third time, it's touching the same trend. Now, if you see a pattern, you recognize a candlestick pattern is an indication that the market will keep pushing higher. All right, so these are the three places, locations we look for candlestick pattern in every market. And believe you me, if you stick to these three locations, and train yourself to see them, which I will show you practically how to identify them, you'll be more right than wrong. All right, so this is a pound yen chart daily. All right, so looking at the chart here now, what can we see? We see a move, a pictorial move of the market. So from here now, remember, the first thing you need to look for is the form, the structure of the market, not the pattern, not the candlestick pattern. So we look for structure at the certain location, because if somebody should tell you, you need to turn left when you go to point A, when you get to a bus stop. So the most important thing is you get to the bus stop first before you look for that turning. Now, the first thing we look for before us to trade candlestick profitable is the location. All right, so we need to ensure that we are at the right location before we can make a decision. All right, so now depends on when you are coming into the market. You can see here, I can show you categorically that we're seeing. Let's look at the forms here. The first one is a structure. We have a structure, we have an impulse, we have a correction, which we identify as a running flat, and at this point, guys, we have a structure, a pattern that we recognize. This is a tweezer pattern at this point. So here there is a form we recognize, and you can ride the wave. And also here we have a pin bar, kind of a hammer we recognize, we ride the wave. So also we've seen impulse, a correction, and impulse. Here we have an engulfing candle, we ride the wave. So until we see a form, we're not looking for candle. All right, that's why you'll be more right than wrong. All right, looking at the market here, we can see if you draw the trend here. Now, what do you see? After an impulse, a correction, an impulse, a trend has been established. At the third trend, we saw what? We saw an engulfing candle at this point. At the third touch, there was a massive reaction on the positive side, which if you applied this concept, you would have won this trade. Also, we are seeing an impulse. So we have an impulse here, we have a correction, three-wave correction, and also at the support. You can see now at this point we have a morning star. So, but you can see TP is smashed. So the reason why we took this trade here was we recognized a morning star. I'll put the stop loss at this point, and we're able to gain this trade. All right, so if we keep going, now it's very important that I explain because the idea behind this trade is just simple. We saw a pattern we recognize by understanding this is an impulse, this is a correction, three-wave move after an impulse. All right, three-wave move after an impulse, and that's why we're able to look for that trade. Okay, so at this point again, you can see we have a support here, and now the market has come to retest this support, and clearly we've seen a tweezer button. We have seen a tweezer button at this point, and this tweezer button here is an indication that okay, this market will reverse at this point. All right, so permit me to put another buy at this point and put the stop loss below here, and let's see how it goes. Beautiful. So now the first trade we took, we used the structure. The second trade we took, we used the support. Now see how we are beautifully executing this trade, because we are taking action based on certain location, and that is the beauty of understanding candlestick pattern and market price action. So all we are doing, we are just following the market to see what the market is doing. Okay, so if I should be aggressive at this point too, we have found a resistance here and we found the second resistance. If you should be aggressive at this point, we should have taken a trade here because this was an indication. This is an evening star that forms here. 1, 2, 3 is an evening star at this resistance. It's an indication that we should take this trade, but we didn't take it. Okay, so at the same resistance now, we have seen another engulfing. So at this point, we might take a sell, because at this resistance, we have seen it 2 times. So that tells us it's a strong resistance. So, but if we are taking it, we are only taking it to this point, that is 1:2. So if you are taking this trade based on this engulfing at this resistance level, so you are taking it to this point. Let's see how it goes. Boom, this TP is smashed. All right, so this is how we're doing it, guys. Okay, this is how you'll be profitable over time, taking candlestick pattern at the right location. So let's see what trade we can take again from this point. A, B, C, but this is a contracting kind of flat. So contracting flat most times is not that clear, but at this point we've seen a formation of a candle. So it's also an indication that this is a good sign. Now you should have taken this trade also, but this would have been a loss. But this is an engulfing candle at the support. We have an engulfing candle here at the support. We didn't take it just because we are in the middle of the trade. So it's as if the market is consolidating here. All right. So at this point, we are targeting, let the market, come to this, give us a pattern at this point or a pattern at this point, because these are previous support and this is a previous resistance that was broken. So we're expecting it to be a support. Okay, so at this point now you can see there's a reaction. This is a bullish reaction, but it's not an engulfing, it's not a tweezer. Okay, so let's see if we can find a pattern that we recognize. Okay, you don't panic. Now look at this one. Okay, this is an engulfing bearish candle, right? But this engulfing bearish candle that formed, can we say that this form at a resistance or this form at a support or at a third trend line or a structure? Now the truth of the matter is that this engulfing candle formed at nowhere, so it has no basis at this time. So because it has no basis, we are not going to take any sell, because we have seen impulse, correction, impulse. So meaning after this first impulse, there will be a second impulse that will come in. So you understand that the bias now is to buy, not to sell. So all we are waiting for is to see a confirmation that triggers that bias. All right? So let's see how it goes. Okay? So this pattern here is a kind of tweezer pattern. All right? Because they start at the same point, and you can see this one also. So at this confluence, now if you are confused at this point, now the best thing is to wait for this resistance to break. So at the close of this resistance, you can see clearly that, okay, this resistance has been confirmed. So we are expecting the market to rally to the top, just because we have a bias, we have a structure that is supporting this move, and that structure is valid. So let's see how we take it. Good. So now the market has closed above this resistance solidly. So now we can take a buy. You can take a buy at this point. All right. Targeting this high. Put your stop loss so tight. The beauty thing about the candlestick is that you can put your stop below that candle or a candle after that candle that confirm the bias. All right. So if you play this, see how it goes. Now the TP is smashed. Now we're just following a simple candlestick pattern at the confirmation, at the structure of the market. Now also we can see here, this was This is a resistance here. So at this resistance, we saw what? An evening star. So this evening star now, you can take a sell at this point, but because this confirmation is too big, that's why I didn't take the sell. Okay, so you keep playing it until you see a confirmation, you know. Okay, so at this point, we are having a third touch of the trend, but this trend is not a value trend. We have a contracting kind of triangle. So the reason why I should be taking this trade is because we have an impulse, we have a correction, we have this triangular, we have a correction. So two ways. It's either this comes to break this low, or it breaks at this point and reverses up before it breaks this low. Now this is structurally way it can form, but we are just targeting to see how, if it start reacting at this point, to close the trade, but if not, we should be able to break this low. So now there is a pin bar here which also can indicate a reversal. So at this point, you might decide to close this trade just to avoid. Good. So now we see an engulfing at this support, which is important because this can be a sign of reversal. So at this point, I'm closing this trade at a break even. Close the trade at a break even and watch. So I will not be taking any buy. So just watch how the market reacts. But this might be an indication that the market will move up. Okay. So now the market has actually moved up. So now we've seen the market actually retesting this high and giving us an evening formation. So let's see. Market actually reversed here. This is a sign of evening star. All right. So now you see how this thing goes. You follow the market as it develops and be able to catch a trade. So let's see what we can get here. Let's take one more trade. So what can we see here, guys? Once the market is becoming more complex, you just zoom out to see a bigger picture. So an impulse, so correction, impulse, correction. Can this go like this? I don't know. So, but let's see. Let's see a confirmation. So you see how I'm trading. I'm trading based on structures. So now, what can we see here? Now, what I'm looking at for here is at this low. This low is very important because this is where this structure is completed. This is ABC. This is where the structure completed. And now I'm seeing another morning star here. Right? See another morning star candle. So you can take this trade, put your stop loss here, and expect the market to break this high. So let's take that. That will be our last trade. Take this to break the high. All right. Beautiful. So the TP is smashed. So you can see how we are taking the trade. And in summary, guys, it's very important to understand this stuff. The reason why many traders fail using candlestick is because they are looking for the candlestick at the wrong place. Now, understand this and put in the back of your mind that every market moves in waves. It makes an impulse, it corrects himself, it makes another impulse, it corrects himself, it makes another impulse, it breathes out again, it breathes in again, low, and comes down again. So the job of every trader is to look for a confirmation of resistance here, support here, resistance here, support here, resistance here, support here, resistance here, and stuff like that. Now you'll be able to witness that to identify the first resistance might be difficult. So that's why trading this wave is very dangerous, right? But identifying the next support, which is that coincide with this first resistance, is easier, and that's the influence we have on the third trend touch. All right, and also at this point where the market has broken the structure, at this point where the market makes this high. So you can see every pattern you can think of in the market head and shoulder, support and resistance, they are all drive at this point. So what we are using the candle for is to look for a confirmation at the support, at the resistance, at the support, at the resistance, at the support, and the resistance. So ability for you to master these 5 patterns will give you an edge and you'll be able to trade consistently, profitably over time. All right, so guys, I believe this must have helped you to see how we trade with ease using candlestick. If you found value using in this video, guys, kindly smash the like button, subscribe to this channel. Don't forget to click on that notification bell, and you'll be glad you did for more valuable content like this. Thank you so much and have a beautiful day. God bless.